How much money do I actually need to buy a home in Calgary? If you've typed some version of that question in Google, then you already know the problem. Most of the answers that show up are answers either for what you do in Ontario and Vancouver or Canada as a whole, in fact, and very little of them tell you the real situation in Alberta and how Alberta does things differently. So here's what I'm going to do. By the end of this video, you're going to know the exact amount you need, the 3 places that amount is spent, and all the government programs that can save you tens of thousands of dollars before you even put an offer. There's one cost that almost every first-time buyer forgets to account for, and an Alberta advantage that could save you thousands compared to Toronto and Vancouver right here with a purchase in Calgary. I'm Ash, a realtor right here in Calgary, and I do this with first-time buyers every single week, so let's get right into it. Here's the situation most first-time buyers are in. You have some money saved up, maybe there's more coming, and you don't know how close you are to being able to actually still make that purchase. Some places online tell you need 5%, some sources tell you need 20%. Then a mortgage calculator tells you what's doable monthly, but then all of a sudden a friend tells you all about those closing costs and you are completely taken aback. The gap is this: almost everything online tells you the rules of buying a home in Canada. Very little of those specifically tell you how those rules play out when buying a home in Calgary. This is a place where a large share of those first homes are condominiums or new construction properties. And the Alberta law handles a lot of things differently from where those regulations were otherwise written in other provinces. So if you're here just for the number, stay with me, because in just about 3 minutes, I'm going to show you the exact number that you need and where you need all those pieces in the entire process in the timeline that it plays out, because that timing is exactly what surprises most buyers. Let's start with a down payment, because that is the number that everyone asks about first. Now, this is not one flat percentage across the entire board. In fact, it is a tiered system. So up to, for the first 500,000, you need 5% down. Then anything above that, you need 10%. And if you cross the 1.5 million mark, you need 20%. Now, those tiers came into effect in December 2024, so a lot of the older guides online still get this wrong. So now let's make this real and what it actually means for you. On an average $500,000 home, that means a $25,000 down payment to enter the door. Clean, round numbers. Now, this $500,000 is no price prediction. It is just an average for where about the Calgary market sits. Now, depending on which area you pick, it might decide whether you get into an apartment, a townhome, or a detached home around in Calgary. If you are curious what those different price points around Calgary are, I put up Calgary market reports every single month because they constantly keep changing. So make sure to check out and watch that. And then if you'd like specific numbers, depending on which community you're considering, definitely reach out. My link's in the description. I would love to have that conversation with you and help you through this process. Now, here's the part that catches most people off guard. Anything below 20%, you still need CMHC insurance, or anything from the other 2 private insurers on properties. And this insurance is called the mortgage default insurance. And no, you do not pay anything up front. Instead, it gets added to your mortgage. So yes, technically you are still carrying it, but it's included in the cost of purchase. And as most people think of it, it's not really a penalty. It's more allowing you the first-time buyer advantage to get into the market without needing to save all the way to 20% and be waiting for years. So I think it's a fair trade. Now, there are many other products on the insurance side that offer way better advantages than taking this mortgage default insurance and can be taken in lieu of the mortgage default insurance, which almost nobody will tell you. And most people don't provide this information. But as a realtor, I think it is extremely important for your overall financial planning to be aware of something like this. So if you come through me with my process in the first-time home buyer process, I will definitely show you what the different options are so that you can maybe focus more on protecting your family while satisfying the condition for the bank. The second thing that the lender checks is the stress test. And no, you do not need to be qualifying at the rate that you take your mortgage. In fact, it's higher. So it's either your rate plus 2%, or 5.25, whichever is higher. This, in fact, is a federal regulation to protect the banks, and the banks want to know that you're still able to make those payments if interest rate goes up. Now, here's something most realtors will not tell you, but I will tell you in terms of protecting your own finances and being prepared as a first-time buyer. Always check your monthly mortgage payments against this stress test rate so that you are fully prepared in terms of when payment shocks come up. If interest rate goes up, you're not trying to frantically find money to make your ends meet and make those payments happen. You always want that buffer, and usually this 2% provides you a really good buffer and a good idea of what future expenses you can potentially expect and making sure you do not get underwater too fast. Now for the costs that nobody warns you about. The promise that I made at the start of this presentation to tell you what the specific costs are that you need. And everyone will tell you it's just the price of the home, and price of the home is only the start. There are in fact 3 other piles of money that you will need, and they are due at different times in the process. Pile 1 is the deposit. So the moment your seller accepts the offer, within 24 to 48 hours, you're expected to make the check out to the seller. This check is always deposited in the trust account of the listing brokerage, so it is kept in between the 2 parties and it is protected by the terms of the contract. It ranges anywhere in the range of 5 to 20,000. Depending on the price property that you are looking to put an offer on. And no, this is not extra money on top of the deposit that you would have been expected to put. It is included in the deposit amount and is deducted against that. But the key aspect is that it needs to be liquid and ready to go. You cannot have your money locked up in TFSAs or especially worse is RRSPs because these take very long to liquidate based on the contract. So you need to have that money ready to go. And the other key point to remember is that you can only start locking your RRSP as a first-time buyer if you have a ready offer in hand that is signed by both parties. So that money is something you can't even touch for this particular expense that comes up when you put an offer. On to pile number 2. Pile number 2 is your down payment plus closing costs. Now these will be due to your lawyer. They will give you a very specific amount that you need to make out to the lawyer's trust. Do not go out and make these checks or bank drafts before that point because there are additional costs in there that you definitely wouldn't have accounted for. And this is exactly where Calgary plays in your favor, the Alberta advantage that I called out to you before. And that is because Alberta does not have a land transfer tax. In Ontario and BC, this alone can cost you 1 to 2% of the purchase price, which can be a lot on top of the purchase price of the home. Alberta instead charges a land title transfer fee, which is a very, very small percentage of what have been that 1-2% instead. So your closing costs here are genuinely lower than anywhere else in the country. So what's actually in those closing costs in Alberta? It includes land title registration fee, your lawyer's fee, a home inspection if you get one, an appraisal if your lender wants one done, title insurance, real property report, which is generally always on the seller side for costs, and adjustments for things like prepaid property tax. A really good rule of thumb is to budget for about 1.5 to 3% for your closing costs alone. Now that's significantly lower than what you would otherwise pay in a land transfer tax province otherwise. A quick tip while we are on the topic. When it comes to an RPR, which is a real property report, and most buyers of course do not know what this means, but this is essentially a survey done by the city to approve everything that is on that plot of land and say that it does not violate any of the rules and regulations by the city. That's in its simplest terms. Now, a lot of sellers have started getting lazy, especially after the boom that we had over the last 2 or 3 years, and they just provide title insurance in lieu of these RPR. Legally, you can, as a buyer, accept that, but we are not in a market anymore where you need to. And so having a realtor on your side that calls out where you have the right and you should ask for a RPR done instead is very, very, very important because it protects you against any future issues, either with your neighbor or the city. You don't want the city coming in one day and then ripping out that entire deck, shed, or pathway just because they need to fix certain city amenities. On the other hand, if you're buying a condo instead, then a similar thing is done by reading the condo docs, which is again provided by the seller side. This always includes the reserve fund study and the stop loss certificate, which will tell you, one, how healthy the reserve fund of the building is, how well they're equipped for future repairs, making sure you have no sudden assessments that come up where all of a sudden you wake up and you owe the building $15,000, $20,000 just because they do not have the money to make the repairs. And that's why most people end up getting condo fees. But that's because you have not done your homework also up front to make sure the building is being well managed. And the stop loss certificate is also extremely important to make sure that the property that you're buying and the allocation that it has towards the condo board and everything that it's due has been properly taken care of by the previous owner. Now, pile number 3 is the one that you have to live with after you purchase the property, and that is the carrying costs. So the monthly carrying costs include your mortgage, of course, and then you have your property taxes that most people forget to account for in how much they need to pay the city. Then your mortgage insurance, again, most people forget this. And then you have your utilities. And then, of course, if you're buying a condominium, then the condo fees on top of that. Remember, the mortgage is never the entire number, especially also when you're purchasing a condo. The condo fees can swing by hundreds of dollars over the time of your ownership. And that has to be accounted for upfront, making sure you have that buffer to make those payments while upkeeping everything else about the property. So that is what it costs. And now, how do we make that number smaller? Because, of course, by now, as a first-time buyer, that number can always be intimidating when you consider that there's so many costs to come. So let's focus on how we can make those numbers lesser, because a lot of first-time buyers end up leaving a lot of money on the table without realizing what they can do. Now, there are two programs specifically built for first-time home buyers, and they stack. So first you have the FHSA, the first-time home savings account, and then you have the home buyer plan. The first home savings account is the FHSA, and you can put up to $8,000 a year and $40,000 in your entire lifetime. And the best way to think about it is it's basically a combination of the two accounts that work really well. So when you put your money in, it works as an RRSP where you're able to get tax deductible income that year based on how much money you put into the account. That money is deducted against your income and you don't pay any taxes on that. And when you go to take it out, that amount, depending on how much profits you made in the account, is completely tax-free. So you could have doubled, tripled your money. And if you're really, really good at stocks, then yeah, that is a huge, huge advantage, because that's kind of what I used when I bought my first home. And I pretty much tripled my money in my account and just used all the profits to buy my home. And that is a huge advantage of this account. Now, the most important thing to realize is there's absolutely no downside to opening this account early. Do not wait to save your money on the side and then open an account when you can put in that $8,000 for the first year. Your contribution room starts the moment you open the account. And so you can put anything you want when you first open the account, even $1. And then after that point, it collects 8,000 contribution room every year. So whenever you do have that money ready, guess what? You can now fund that account fully upfront, even more than 8,000, because by then, if you do it in year 2 or 3, then you would have saved up 8,000 or 16,000 or even 24 and put all of that in one time. The second account you have is the home buyer's plan account, which basically allows you to withdraw from your RSP up to an amount of 60,000 tax-free. And you can pay that back over the next 15 years. Now that amount recently went up to 60,000. Previously it was at 35. So a lot of videos and content you might see online might be still telling you the wrong numbers. And now here's the real trick, and where it stacks is use both accounts. Use FHSA, but then also use your RSP as the home buyer plan. But then as a couple, if you both do it together, that is a massive opportunity cost, or massive opportunity, I should say, that will allow you to quickly save up for your down payment. And all of this without paying any tax right now. And then the other huge advantage is, and the reason I tell people to take advantage of these accounts is because if you're just saving in cash or a momentum like a savings account, those interest rates now barely compare to the level of inflation that we have. And the only way to truly combat inflation is putting your money in good assets, putting money in assets that go together with inflation, together with the growth rate of your asset class. Of course, this is not investment advice, but that is where the trick lies, in being able to catch up to where the market's going and not feeling left out as a first-time buyer. Now, these two are for every first-time buyer, but if you're planning to buy new construction, then there is a third program that is just massive. And I specialize a lot in new construction, and I help people buy a lot of new construction in Calgary, because Calgary, a majority of properties now, given the rate of construction, we have a lot of properties available on the new construction side, and there's massive advantage that most people don't realize. We actually get $80,000, $100,000 off even sometimes. So make sure you reach out if that's the sector you're looking into. But there's a program specifically designed for now new construction that will allow you a massive leg up in this market. And this program, of course, is none other than the first time home buyer new construction GST rebate, which essentially gives you back that 5% up to on $1 million property. So 5% on $1 million is $50,000 that you could get back. That's a massive, massive advantage. And there was a huge scare when they first announced this program that builders are going to rapidly increase their prices. But of course, the market has turned and they don't really have the advantage playing on their side. So instead, on top of that 50,000, we are able to negotiate another 30, 40, 50,000. So overall, you're getting 100,000 off what you would normally pay right now. So a newly built home, of course, carries a GST on it that a resale home just doesn't have. And that is the percentage that you're getting off. Between $1 million and $1.5 million, that's a gradual fade off for that GST rebate. But up to $1 million, you still get 5%. Now, here's the fine print to qualify for this program. It has to be new construction only. It has to be your primary residence, your principal residence, and the contract has to have been signed after March 20th, 2025. That is how you qualify for this program. The cool part about this program is I was able to get a lot of buyers in last year before the hype built up, and they were able to absorb that into their purchase price, but then get that GST rebate off this year after now a lot of people have started coming into new construction with the law having passed, and they are getting rebates of this up to 50,000 and building garages, finishing their basement suites, having massive upgrades on their home with cashback from the government. The other thing to look out for is you do need to confirm the GST rebate and how it's done per builder. Most builders have adapted, but certain builders are still not able to verify or do not want to take the guarantee to give it upfront off the price. So you would have to file later together with the CRA. So instead, try and find maybe a builder, if it matters to you, to reduce the price up front if you do not want to take on that additional cost in your mortgage. The other piece to watch out for is some builders put it into their listed price versus now most builders I'm seeing shifting away from that and just putting their base price and then saying plus GST. So again, you have to account for that pricing point and the model that they're using when you go in for your appointment. Now, this is what I want to leave you with, is this is the biggest mistake essentially that most buyers make. It's not about picking the wrong home. It's about not accounting for those three piles of money. So apart from the purchase price of the home, accounting for how quickly you need to be able to make those deposits after signing the offer, then how much you need for the closing costs, and then finally your monthly carrying costs on the home, how much you need to account for, how much buffer you need to have so that you're not overstretching your budget. It is very, very important in this market and economy to live well within your means. I don't tell people to stretch to 100% of their mortgage qualification. That's almost the worst thing to do. Always have buffer for contingencies. The last thing you want to be is underwater on your mortgage and having to figure things out from there. The buyers that end up having the most comfortable, calm process through this first-time buyer process is the ones that are aware of the entire pipeline, when you need those piles of money, and having the money either liquid, being prepared for the expenses, and not being up for any surprises. I have a first-time buyer guide that goes into the detailed psychology of a buyer, things you need to be aware of. I'm putting the link down in the description below. I'm sure it'll be extremely helpful for you if you're watching this video. It goes far more in depth than purely just the Alberta process. So make sure you grab that. It's absolutely free. Now, taking this analysis one level deeper, there's a very clear difference of being approved for a mortgage and actually being ready to buy a home. The stress test, it only tells the bank if you're going to be able to still make the mortgage payments if the interest rates rise, but it does not tell you what amount of additional expenses will come up, how much money you have for your daily living expenses on top of these monthly home payments. Here's what you should do. Take that stress test payment, add utilities, add tax, add condo fees, add everything possible related to the property, the insurance that you have, medical insurance, everything. And then add additional expenses. Imagine your car broke down that month. You had to replace something major in the car. You need an additional $3,000, $5,000. Would you still be okay living in that home? That is truly what affordability is and tells you if you are ready to buy. Because if the answer to that is yes, then you're fine. But if not, then you're not necessarily stuck. You might just have to readjust your expectations to a different part and segment in the market and what property type you'd potentially be looking for. And to your advantage, Calgary is literally the best spot for that as a first-time buyer. It's the most first-time buyer home friendly because it allows you a variety of options and always allows you a way to enter the market depending on where you are sitting at with your price range. Now, if you're a first-time home buyer and you only take away one thing from this video, that is open an FHSA right away this week, even if you put just a small amount as a deposit in it. Here's why that's the first move that I would recommend and not go get pre-approved, because that account, starting it today, already puts you in a tax advantage and gives you that level of commitment to making that decision of wanting to go out and buy that home eventually. And that real decision to go out and open that account is going to put you on the path to making those payments towards the account that you can feel is very, very real, and it's going to hold your down payment. Of course, pre-approval does matter, but when you go in for a pre-approval to a lender, they move really fast. And those conversations get along even better when they know you have those accounts set up and you're well aware now of the three piles of money that you need during this entire process and how everything is going to play out, and you're well prepared. Something to definitely avoid: don't drain every penny trying to hit a 20% down payment. In Calgary, with mortgage insurance available and lower closing costs, hitting a 5 to 10% and then accounting better for the closing costs and your upcoming month expenses on the first few months that you own that home is far more important. That is a way better position to be in, where you are comfortable and you have a buffer rather than stressing yourself out over reaching 20% in down payment. If you're looking to buy your first home in Calgary and you're looking to map that exact three piles that you will need for the down payment, then the closing costs, and then the ongoing monthly expenses, make sure you reach out with the links in the description. I would love to have that consultation call with you. guide you to exactly what is best based on your short, mid, and long-term goals. Apart from that, we'll also take a look at your first-time home savings account, your home buyer plan, to figure out an exact number that makes sense for you, what property types and which communities we should target for all of it to come together. And finally, if you're looking for new construction, I would absolutely love to leverage my relationship with the builders I have so far and get in those steep discounts for you so that we are able to secure you not just the best pricing, but add in a lot of additional upgrades. Something that most people forget to do is compare new construction the same way you do for resale, checking other builders in the area, what incentives are being offered, especially in a market like this, and being able to pit them against each other to then try and get more incentives and upgrades included. And I have an entire database that will be available to you if you're a first-time buyer looking for new construction, and you will receive a weekly report every single week at the start of the week for every single new construction that has hit the market that week, what incentives being offered, where the price drops are, and where your unique advantages lie. Finally, if this is the kind of information that you like and this is the format you really wish you had before, then please do hit the subscribe button so I can reach more people like you. I put out market updates every single month when the new reports come out from the Calgary Real Estate Board, and we go a lot deeper than most YouTube channels ever do. I also have a lot of reports and guides that I make quickly available to download either in the description below, and I'll also put the QR codes up here on screen. Always have raving reviews, but given especially that you're a first-time buyer, these are going to be very, very useful for you. So make sure you grab those while you're here. And if this kind of data and information is useful to empower you to make the biggest decision of your life, then this channel is for you. I'll see you guys again in the next video. Till then, take care.